Hey guys, it's Jen.
Bryan.
And Tammy.
So for those of you who do not know, we are so super lucky to have Tammy here with us, but I am just beyond blessed to have Bryan as part of our team because he is like about 16 years. Yes, it's so lucky to have Bryan who has a mortgage background, about 16 years or so of that. Can you tell us a little bit about what we were talking about regarding the FHA situation so that you guys can have a little diatribe about this? Because it's super important that people understand that situation. I'm
Sure.
being funny so that y'all can have a chat.
There we
And
go.
okay, go.
So, I ran into situations where agents on the other side, so if I was representing Jen and her buyers, but running into agents on the other side that wouldn't accept FHA programs, and I couldn't figure out. My immediate thought was, there's something wrong with the property, because I know the guidelines for that unless it's changed. But how do you get around that, or are you still seeing that? I mean, I've been out of the industry for over a year. My crow's feet are starting to go.
I'm starting to get more.
I gave Tammy mine.
So mean.
But,
I just use cream.
but I don't. That was one of the things that I never could it was a hurdle I never could get over. And I've had people since then say that they had to switch their program, and I don't understand. I was wondering if you were still seeing that.
Yeah, no, that's a great, it's still being seen in especially where we have a market with low inventory, especially for, traditionally people using the FHA loan are first-time home buyers, so that price point can get extremely competitive in this market and continues to be a very competitive market, meaning multiple offers. Of course, sellers always want cash, but when you start to put financing into the picture, when you're putting in offers, I still see conventional being king, then, VA, FHA are kind of below that, depending on how much money the client is putting down also comes into play. But what I have found, or what I try to do from a lending perspective, is make sure that the listing agent understands the product that I have matched the client with, and make sure that once their offer goes in, I am making that phone call to that agent to make sure that they understand, or if they do have any myths about a certain product, that I can debunk that, so that I can get a feel for how comfortable that listing agent is, so that they can then tell their clients when they are consulting on all of the offers that have come in, to make sure that they understand the due diligence that we've done. Certain things that you can do from a lender perspective, or that you can ask a lender, Caliber does this, is a TBD underwrite. And basically what that means is you can have an underwriter underwrite the incomplete file prior to going out and putting in an offer. And what that basically tells a listing agent and the seller is that you have actually gotten approval from a person who actually can approve a loan. As a loan consultant, my job is to consult on loan products, make sure that I set you up for success, but I personally do not have the power to approve a loan. So when you have a conditional approval and that letter goes in front of a listing agent, it really should not matter what type of product you are leveraging, because that deal is going to close.
So as a caveat to that, Bryan, what I found as an agent, what most lenders have been doing was, instead of saying you qualify more for an FHA product, going to a non-conforming conventional product. So, and the way that I had heard the lender trying to justify this to the consumer, the person applying for the loan, is that you might have PMI, you might not have PMI, you might not be able to move forward with the property if it had structural issues, or issues that the lender would then have institutional requirements for inspection to have rectified. So it might have been, bless you, girl. It might have been that the lender needed to make the applicant more qualified in a non-conforming conventional loan, giving a 3% down situation that moved them away from an FHA loan. that could have been what the situation was and why people were moving away from FHA loans,
Mm-hmm.
and also that there were a lot of buildings potentially, especially condo, that weren't qualifying. And this is a long one, you guys, but super important because it
That is
might
true.
depend on the type of housing, one, that it was, and why people were moving away from it, because it goes back to the debunking of the myth that you don't necessarily need 20% down, and there were products that could really fall into that category.
Right.
So I really appreciate your thought on it, and that it was something that was happening then but still happens now.
Absolutely.
But I know we're getting a little bit long, but it's important for people to kind of see what happens with that. But thank
Right.
you for your input on that.
Sure.